What's up, guys? Welcome back to my channel. My last post, I talked about Ethereum and Bitcoin and the parabolic advance, I think, from the 30,000 level. We hit all-time highs around 72,000. We're currently experiencing a retrace. I want to go in depth on Bitcoin, but really what I want to talk about in today's video is its love for the yearly open. I'm going to show you how to get the yearly opens. I'm going to show you exactly what Bitcoin likes to do with those yearly opens. And then we'll do kind of a full analysis of where Bitcoin is at, bullish, bearish, and kind of what to expect in the future based on some historical precedents that Bitcoin has. Now, I posted this chart in TradingView, which I will post in the comments for you guys, in my comments, that you guys can take a look at, where I break down all the charts and kind of all the analysis. But I'll just do a video on it as well, because when I posted this on Twitter, I had a few people ask if I could do a video breakdown. So the main thing is when you're looking at Bitcoin, most people look at it on the daily or the weekly. To get the yearly opens, the easiest thing is to go up to the time chart at the top and then go to 12 months. So this is Bitstamp. This is really a lot of historical data here. This goes all the way back to 2013. So what you can see though is that on the open, whoops, open there. Then we opened on 2014. Here's the open on 2015. And then the yearly open in 2017. Okay. So that's how you get yearly open. So the yearly open here in 2013 was at $21. The yearly open in 2014. So let's apply that since 2018, because that's where all of the significance rests. So basically, since 2018, Bitcoin has had this really strong affinity for retesting these yearly opens. So this was the 2018 yearly open around 13,881. And when we zoom out here, what we can see is that based off that yearly open, price came all the way back up and basically formed a bearish retest at that yearly open. I mean, within, a couple $100 there. So it's a very, very key level, because it's done this not once, not twice, but every single year since 2018. And the only 2 years that haven't been tested yet are 2023 and 2024. So that begs the question is, do these get retested? Or is 2023 going to be like 2017, where it just goes, basically remains untested? So you see the 2017 yearly open was right. Oh wait, actually it did get retested. So let's go down to the daily. All right, so this data goes all the way back since 2017, it looks like. So when we find the 2017, I actually didn't go back that far to look. So this will be interesting to see if it fits our data. Yeah, so it actually does go back. So we went to 1346, came back down, and we tested the yearly open level right there at 963. So this even works for 2017. So basically, the idea is that at some point in the next year or two, price likes to go back and retest the level of the yearly open of the former years. So let me show you a whole bunch of examples, and then we'll get into what we may expect in the future. So 2017, we just saw that on Bitstamp. It went back and tested it. The 2018 yearly open is right here. Came down, retested it right there, formed our bearish local top. 2018 retest. The 2019 yearly open, you can see right here, basically was at 3750 right there. What did it do? It came down and tested it on the COVID crash of 2020, retested that 2019. So it looks awfully familiar, right? 2018 formed our local high, 2019 yearly open formed our local bottom. The 2020 was opened here, and it came down, tested it here and here. So it tested it twice within the next year. The 2021 retest was super similar to the 2020 crash, where it tested 2019. See, the 2020 yearly open was right here. and then, you know, price went all the way up to 62,000, and then the yearly open retested it right here. So it gave us basically, again, another local bottom, okay? 2022 yearly open was right here. Price broke down. What does it do? It comes back and forms a bearish retest, similar to that 2018 retest. Gave us our local top until we came all the way down here. Now 2023 yearly open is right here at around 16,500. Okay, so we broke out, and you'd expect us to kind of come back, and maybe it did if we zoom into the daily, but I don't know if it did. Let me see. Let's see. So December, January 1st is right here. Yeah, we didn't really go back. So that this level remains untested. And then the 2024 yearly open. So if we come all the way through here, so we go to January 1st. So the 2024 yearly open is right here, this green line that I marked out, 42,256. So the question is, do we come back and retest this 2024 yearly open and form like our Pico bottom, similar to, you know, 2021? Kind of looks real similar in structure, right? Right here. And then do we come down and do we test that 2024 level? Or, you know, between the miners, the German government, United States, you know, the Mt. Gox creditors, all these people selling into kind of an empty market, do we get a deeper capitulation in almost a bear market down to the 2023 open around 16,500? Well, we have a lot of historical significance, and I'll show you a couple things. So we've got the yearly open that I just showed you guys, the 2024 yearly open. All right, let me zoom out. Sorry. All right, so we're over here. Okay, so we've got a few things. Well, first off, this isn't really like a strong support. It is at the base of the impulse. So this is kind of like a minor support, I would call this. Okay, it's not too big. We can even like throw up a BPVR and see if there was like a lot of volume in that range, but I don't really think. Whoops, volume. VRVP, yeah. All right, so we can throw this up, and you can see not a lot of historical volume in that level. But we'll look at our yearly open level. Massive historical significance in terms of volume. Okay, so this 42,000. This is not just a significant level in terms of a yearly open, but it's also a significant level because of the volume that was being traded there. So we've got our VP. I always call it the VPVR. VP at that level, so the 42,000 level, right at the yearly open level, right? So 42,500, so right there. So we've got that going for us. So this is kind of a minor support, minor volume, minor support. You know, usually what price likes to do is it kind of goes back to the last level of consolidation, and usually the base of like the weekly impulse. So the base of the weekly impulse would be kind of right around here, this candle right here. That's the base of our impulse. So this is a major support. So the other things we can look at is, if you've ever been following my channel or if you followed any of my analysis in the past, you also know that Bitcoin loves the 618. So if we draw from down here, it gives us a level of 37,860. So, you know, the thing about yearly opens is they're just very, very historical levels. So we could have something where we do something like this, and then we hold that yearly open. So this just forms like a wick down to our 618, which is very, very historical. I have a lot of analysis around that 618. Or, you know, another thing is sometimes that 618 doesn't start until the last, you know, kind of sell off, and that would give us a level much more similar around that yearly open, around 43,680. So basically that same kind of 43,000 zone. And this is what it did in the past back here, is this didn't really start until kind of this last former sell-off. And then what does Bitcoin like to do? It goes right back to that 618 level around 30,900. And that was also that yearly open. So again, double confluence. So the thing about trading is it's all about probabilities, and you derive probabilities through confluence. So support and resistance, moving averages, your volume levels, where a historical price reacts to, price action analysis, Monday opens, weekly opens, yearly opens, monthly opens. And so you derive confluence with all these different things to find high probability trade setups. Now, what I'm talking about is a swing trade. I'm not talking about a short-term 5-minute candle type trade. I'm looking for longer swing trades. Where can I find to kind of shove in a bunch of chips and kind of hold that for maybe new all-time highs, range high breaks, to look for a 2x to 3x. So 618, 43.5, if we go off that last remaining sell-off, here or here. And so I think this is probably a little bit more accurate than the other ones. The other thing that we want to look at are our moving averages. You can use the exponential and the simple to form kind of a band, and there's lots of indicators that have them as bands. So there's the 200 EMA and the 200 SMA. Now, the difference between the two is exponential reacts a little bit faster to price because it's more heavier weighted to recent price action, versus the simple is just spread out over that time period. So 200 days, it's going to average out the price, and then it's going to give you a smooth line based on those prices. Whereas exponential, it weighs a little bit more to the top third price action. So it gives you a little bit more of a fast. So if you look at the exponential, compared to the SMA, it usually reacts a little bit more quickly to price. So you can see it kind of has these bigger volatility swings because it's just a faster reacting moving average. So Bitcoin historically, if you go all the way back, loves the weekly 200 simple moving average. Retest, holds, even all the way back over here. Retests, holds that little band. Okay, very, very historical in terms of holding price action up. The first time it really broke was here in 2022 when we were really in a true bear market down here, and then we bounced back, reclaimed, and then we bounced right back off that 200 EMA in that 25,000 region. So we've got some historical significance with that as well. And again, that's kind of at our 618 level if we take it down here, okay? So that's at that 38,000 level. Now, one thing that Bitcoin really loves to do is it likes to run all liquidity available. So all liquidity available would probably be underneath this wick, okay? And that would be right at 37,586. That would be like the true 618, but it'd also be right along with that 200 exponential moving average of the week. So this is potentially a very, very strong case for confluence on our yearly open, along with our 618 and our 200-day moving average and exponential moving average. So this is kind of where I'm looking at as a potential bottom. Now, there's a few things that would change my mind. First off, we've got a pretty clear invalidation here. If Bitcoin can get back above, 56.6, but really what I would be looking for is, can we get back above the daily ribbon of the 200-day exponential and simple moving average? Because if we can't, then this is typically very bearish. Oops, let me get my little thing. So see how if we zoom in here, we tested it once, rejected, tested it twice, rejected. We actually came up and tested it a third time, and we rejected. So now we've got a very clear invalidation for potentially bullish and bearish. So we really want to see us get back above 58,800. Now, the German government is currently just kind of selling en masse. The market's doing a really great job at absorbing it. The fact that we're still trading around $60,000 when we're selling into kind of a low liquid environment is very, very impressive. We've got miners capitulating because the halving reduced their ability to make money, so their overheads here. They got, the amount of Bitcoin that gets released per block gets halved with every halving, so it makes mining a lot more difficult. we've got miners capitulating, which is on evidence with on-chain. Willy Woo's done a couple of really great posts on that. And then we've got the yearly open, and then we've got the Mt. Gox creditors that are getting all their Bitcoin back that may create some sell pressure in the market. So we've got a few things that are kind of creating some of this sell pressure. And when people know that people are going to sell and people are waiting to buy, it's kind of like this foregone, it's almost like a self-fulfilling prophecy where they know that they can get it cheaper because someone's trying to sell and get rid of, $5 billion, $10 billion worth of Bitcoin. They know that they can get it a little bit cheaper. So what I'm looking at is I will flip back bullish on Bitcoin if we can reclaim our daily 200 MA, 200 EMA. Super easy to make money that way because when we got back above it here, we reclaimed it, retested it, and then, we did a nice 55% move. We lost it, okay? We got back above it, and it's like, okay, we're back in a bullish trend. And so it's easy to get, find our entries to get long. And I made a bunch of posts on where to enter on Bitcoin. But we got these nice entries and we got a nice 162% move out of it. Now we're back below it, and we may chop around like we did here where we just kind of chop around in this zone. Maybe we hold 52,000 and then we reclaim it like that because these will start to kind of move like this because price is below it. But if we reclaim, you just get bullish again. No big deal, right? And then you find your long side entries. Now for me, I don't typically short the market. I hedge, so I'm basically break even or 1-to-1 on my spot holdings. And so I hedge at, where when you see like good sweeps or kind of euphoria, it's good to always hedge just to kind of like hold your spot holdings at that valuation. But I don't typically like to short the market just because that's just not my style of trading specifically. I ideally look for swing trade longs. So 52,000, then we've got this level. So ideally, man, if we get any sort of capitulation down here into this 40,000, 30,000, I think that'll be a really great level to buy. And I think we do eventually go back to 75, 72, maybe even push 100. I don't think that we're going to go down to 16,500 and retest this kind of like bottom zone here unless we have some sort of, maybe quantum computers breaks Bitcoin or something like that. But that's the only time that I would be looking for that. I hope you guys kind of understood everything I was saying in terms of the yearly opens. They're great to add to your chart, but really gives us some historical significance in terms of like what we're looking for. If you want me to do any other sort of breakdowns, let me know in the comments. And if you like these kind of videos, make sure you like and subscribe. I don't put them out super often, but only when they're super important. And I think you guys need some good updates. So that's it, guys. See you guys in the next video. See ya.